broader tech sell-off today. So how might Meta fare as it gears up to report earnings after the bell? Here with what she'll be watching, Meta shareholder Nicole Webb of Wealth Enhancement Group. Nicole, from the notes that I've read today on your Meta position, it sounds like you're not a very thrilled shareholder. Am I right?
I would say I am a cautious shareholder. There's certainly going to be a ripple effect across technology in the coming weeks. When it comes to Meta specifically, though, Scott, when we are looking at Meta in the rear view lens, we expect to hear that ad revenue last quarter looked good. Very similar story to what we heard from Alphabet, that layering AI has become incredibly efficient in helping to target audiences. It's increased to lower expense, higher revenue in the ad department. However, it's hard to look through the lawsuit pending on algorithms and the effect on children that we've seen filed in 41 states. And so when we think about taking the existing modeling, layering AI on top of it, that gets called into question. And so what we have to start looking for then is below the surface, meaning the lesser talked about parts of Meta. Can we monetize WhatsApp? Can you monetize chat through large language models? Is augmented reality or is glasses something that is less than 20 years into the future? And so we really are calling into question, where Meta goes from here in light of some of these recent calls out against the algorithms and how they affect families.
I know, but the stock is up better than 100%, right, year to date. What's there to be so cautious about? I mean, it's not like we haven't had regulatory bluster around this company specifically and the entire mega cap universe for the last number of years, and it, for the most part, has never impacted any of these stocks in any meaningful manner.
Yeah, and you're right. And, it goes back to, can this time really be different? And perhaps it's a bit of bias to the experience of these magnificent technology companies. And look, Scott, I've been on the record with you saying, I believe mega technology is a freight train, and it is going to stay in momentum. When it comes to Meta specifically, we do have to pay attention to what has kind of been really below the surface and is being pulled forward, and we do believe it's meaningful. At the same time, we also know that they have a history of not walking the tightrope well in terms of innovation while remaining disciplined in spend. And so when we think about layering on subscription services or heightening user efficiency, we start to then think about what type of real revenue are we creating there, and is it enough to say that what has been priced in from layering AI on top of existing models, assuming existing models can continue and that the penetration remains as sticky as it is today, we really do start to call that into question. So again, look at those last 12 months, look at where the stock sits, look at the other 490 companies. I know you saw my notes on that too. This is where we just go, okay, well, if we have a neutral position on Meta, I'm not saying we're running for the hills, but at the same time, if we're going to think about deploying cash outside of treasuries today, is it into Meta? And that is where our firm is saying no.
Right, but I mean, you a little bit ago called mega cap tech a freight train. I think that's the words you used. I mean, some are wondering whether there was just a derailment today in this trade broadly. Are you in that camp?
I'm not in that camp, actually. So I would just go back to, not all mega tech companies are created equally. The softness around the response to Alphabet stock today and the pullback there, I would say, is more this competition narrative in cloud, Microsoft versus Google. When I think about Alphabet, I tend to hone in on the fact that I and I speak not broadly on behalf of the firm here, but for myself, believe that YouTube is the leading media company in the world. When you think about the number of subscribers to Netflix, where Netflix has an actual cost to the production of what we watch, versus a YouTube where we have this expected experience of ad, we know about layering AI on top of that. and the cost of the content is at the expense of someone else, and we have hundreds of millions more subscribers to YouTube. This is where I think we are a little hyper-focused on some of the technologies of the past and getting behind ourselves and thinking about where the applications of new technologies will create expansion of business as we know it today, and not just in the sense of going downstream.